The United Kingdom is often viewed as a land of stability and prosperity, a destination where countless migrants seek a better life. Yet, in recent times, a surprising shift has emerged. Many British citizens themselves are voicing a desire to leave their homeland. Social media platforms are filled with stories and reflections that narrate a struggle to maintain a decent life in a country once seen as thriving. To understand what is happening in what was once the proud nation of Britain, it's essential to examine whether this crisis is a temporary downturn or a sign of deeper structural issues. More importantly, we should consider what lessons can be learned from Britain's experience to prevent similar mistakes elsewhere. The aim here is not to gloat, but to analyze the root causes of these challenges and explore steps to avoid repeating them. Because any country, regardless of its stature, can face comparable difficulties if long-term consequences of economic and political choices are ignored. Let's start with the most pressing concern among the British: the stark disparity between incomes and the rising cost of living. For example, a young banker in Birmingham earning about £19,000 annually after taxes might seem to have a decent income. Yet this figure is roughly the average wage from the late 1980s. Remarkably, despite nearly 4 decades passing, real purchasing power for many has hardly changed. Meanwhile, prices have soared significantly, in some cases several times over. To illustrate, in 1989, the average salary could buy approximately 6,000 loaves of bread. Today, less than 2,000. Back then, a typical monthly income allowed someone to fuel their car about 80 times. Now, just 25. Over these nearly 40 years, living costs, especially property prices, have skyrocketed. In the late 1980s, a typical house in Britain cost around £41,000, roughly 2 years' average earnings. Today, houses often exceed £280,000, which amounts to more than 10 times a person's annual salary. In London, the situation is even more extreme, with a modest apartment starting at around £4,000 per square meter. To truly grasp the scale of this crisis, note that prior generations could save enough to purchase their own home within a few years of work. Present-day young Britons, however, face a decade or more of strict savings to afford similar property. Many accept that owning a home may forever remain out of reach, joining what they call the rent generation, who spend their lives renting instead of owning. Looking at the typical life of an average British citizen, consider a resident of Bristol, a city with about 500,000 inhabitants. Renting a modest yet decent apartment costs at least £1,000 a month. Utility bills, property taxes, and internet add roughly £350. After paying rent and bills, the remaining sum is about £800. From this, about £250 are spent on food, £150 on transportation, since owning a car is no longer affordable, and around £100 go toward household essentials and personal care. Additionally, people allocate roughly £80 for mobile phones and internet subscriptions. These figures reveal the growing financial squeeze faced by ordinary Britons today. The disconnect between incomes and expenses has turned what once seemed a prosperous nation into a place where affordability and security are increasingly out of reach for many. Today, roughly £200 remain for all other expenses: entertainment, leisure, unexpected costs, and certainly nothing for savings. From an average monthly income of £2,000, that sum barely covers basic essentials like food and transportation. For most Britons, Living paycheck to paycheck is the norm, leaving little room to build a financial safety net. Many feel forced to forego even a decent car, not out of environmental concerns, but simply because maintaining one is beyond their means. Annual insurance costs about £1,000, road taxes are around 200, and additional expenses such as permits, maintenance, and fuel, priced at roughly €2 per liter, make car ownership a luxury few can afford. It's especially difficult for families with 7 or more children, for whom the cost of preschool education alone can reach almost £1,000 per month per child. In some cases, it's more practical for a parent to stay home rather than pay for childcare, which deepens financial strain. Many believe that in a developed nation, working full days just to survive shouldn't be a reality. Yet today, a considerable segment of the population lives exactly that way, with little left over after covering mandatory expenses for recreation or leisure. Is the current crisis a temporary downturn or a sign of long-term decline? To grasp this, let's take a brief journey through history and compare Britain's standard of living from the aftermath of World War II to today. The post-war years were marked by recovery and austerity, with typical family dinners consisting of boiled cabbage and hope for a brighter future. Britain was virtually bankrupt after the war, laden with debt, and its infrastructure was in ruins. However, foundations were laid for the social state. In 1948, the National Health Service was established, providing free healthcare to all citizens. Key industries were nationalized, and thousands of social homes were built, reflecting a belief that a better future for children was possible despite hardships. The 60s heralded a period of unprecedented prosperity. Economic growth allowed working-class families to buy televisions, washing machines, and even holiday abroad, often to sunny Spain. It was an era of cultural explosion with the Beatles, the Rolling Stones, miniskirts, and bold artistic experiments defining the decade. This boom was driven by global economic recovery, increased trade, and advances in science and technology. During that period, the middle class expanded significantly, and life expectancy increased thanks to better healthcare and nutrition. The 70s, however, brought challenges: energy crises, inflation, and widespread strikes. The Adna Tisica Devitsat Semdesat Tre oil crisis caused a sharp spike in prices, plunging the economy into recession and stagnation. During the late 70s, the United Kingdom faced a period of economic decline paired with soaring inflation. The so-called Winter of Discontent swept across Britain, marked by widespread strikes that disrupted the supply of essential goods. In some cities, garbage remained uncollected for weeks, highlighting the government's growing inability to manage the crisis. This deepening chaos paved the way for Margaret Thatcher's rise to power, signaling a drastic shift in national policy. Thatcher's era was characterized by fierce reforms, closing unprofitable mines and factories, curtailing the influence of trade unions, and privatizing numerous state-owned enterprises. These measures led to significant job losses in industrial regions, but also laid the groundwork for new economic sectors to emerge, such as finance, information technology, and creative industries. For many Britons, the 80s represented a time of rising prosperity. Wages outpaced inflation, higher education remained free, and homeownership became accessible even for young families. These improvements were largely sustained by two main factors: easy credit and relatively low property prices. Banks generously extended loans, and citizens eagerly borrowed, confident in the promise of continuous economic growth. However, beneath this picture of stability, seeds of future difficulties had already been sown. The manufacturing sector continued its decline, making the economy increasingly reliant on financial services. Regional disparities deepened, with the prosperous London and Southeast contrasting sharply with the depressed former industrial heartlands of the North. The financial bubble burst in 2008 with a global economic crash. British banks, heavily engaged in risky financial transactions, teetered on the brink of collapse. The government responded with unprecedented rescue efforts, injecting over £850 billion into the banking system. Since then, the UK has struggled to regain its previous growth rates. This ushered in an era of austerity, cutting public spending, freezing salaries in the public sector, and reducing social benefits. Real income stagnated even as the cost of living continued to rise. The situation was further exacerbated by Brexit, the decision to leave the European Union in 2016. The uncertainty surrounding Brexit's terms prompted capital flight and decreased trade, compounding economic woes. Today, many Britons nostalgically recall the 80s, often overlooking that the period's prosperity was largely driven by credit expansion and temporary economic advantages. Economists note that Britain's apparent wealth during this time was less a sign of genuine growth and more a construction built on future debts, an illusion of prosperity rooted in credit bubbles and fleeting advantages. Who is to blame? In the current state of affairs, one might wonder if the present crisis was avoidable. Among the most overlooked yet profoundly troubling issues in modern Britain is fuel poverty. Can we imagine a developed European nation where people die from the cold in their own homes? Sadly, this is a stark reality. According to official government statistics, in the winter of 2020-2021, roughly 24,000 excess winter deaths occurred in England and Wales. Additional fatalities linked to cold temperatures. About one-third of these deaths can be attributed to inadequate heating. In Finland, with its harsher climate, this indicator is nearly 2.5 times lower. The root cause lies primarily in poor home insulation in Britain. Despite being well into the 21st century, many British houses still feature single-pane windows, uninsulated brick walls, drafts from worn window frames, and insufficient roof insulation. All these factors turn average British homes into inefficient heat leaks, rapidly losing warmth. A second issue is the high cost of heating. Nearly 13% of households, more than 3.5 million, face the painful choice to cut back on heating to save money. For some families, heating costs exceed 10% of their income. Cultural habits also influence the problem. Many Britons tend to heat only one room, use electric blankets, and leave their homes unheated or only partially warmed. While paying European-level taxes, British residents receive a comfort level akin to that of developing countries. The national energy system raises serious concerns. Workers earning between £12,000 and £50,000 annually pay 20% income tax and 10% national insurance, reducing nearly 3/5 of their earnings to taxes and contributions. Meanwhile, those earning above £50,000 pay only about 2% of their income above that threshold in national insurance, creating a regressive system. In contrast, Nordic countries impose taxes up to 60% on the wealthy, yet this system fosters a poverty trap. Higher earnings often lead to greater taxes and loss of benefits, discouraging upward mobility. The situation with healthcare is equally dire. The National Health Service is in decline, with waiting times for elective procedures reaching record highs of up to 3 years. Many Britons are forced to turn to private healthcare, depleting their savings. It's no surprise that increasing numbers of citizens question the future of Britain itself. Particularly among the young and educated, there is growing interest in emigration to Australia, Canada, New Zealand, or other European countries. Analyzing the current landscape reveals a troubling disconnect. Stagnant wages, unaffordable housing, rising living costs, an unfair tax system, and declining public services, covering everything from healthcare to education. Britain today resembles a person who has lived beyond their means for years, now forced to face the consequences. A decade of financial speculation, underinvestment in the real economy, privatization of key industries, and the shrinking of social programs have all contributed to this predicament. Ultimately, the blame lies with a systemic failure to address core issues, failing to ensure adequate housing, affordable energy, and a robust healthcare system, leading to a crisis that seems increasingly inevitable. The ongoing crisis in Britain stems from profound systemic issues, as public opinion surveys increasingly reveal. Many citizens perceive their country as sharply divided, a nation with stark economic disparities, where impoverished regions contrast sharply with an over-rich capital, and entrenched injustices persist along class lines. A significant number of Britons report having to forego holidays and social activities simply because of financial constraints. Daily life has been reduced to a relentless cycle of work and home, where even the use of household appliances becomes an exercise in frugality. Alarmingly, a growing portion of young Britons feel no real prospects within their homeland. Discussions on social media frequently suggest that for ambitious youth, the best option might be to leave. According to recent surveys, up to 70% of individuals aged 18 to 35 are contemplating emigration, an unprecedented figure for a developed Western nation. For many, even the climate has become a concern. While weather may not be the primary motive for leaving, combined with economic hardships, it adds another push factor. Some believe that if they must struggle for survival in an expensive country, they might as well move to sunnier places such as Australia, Spain, or Portugal. It's crucial to understand that Britain's current crisis isn't unique. Similar processes unfold to varying degrees across other Western nations. These developments mirror deeper economic shift driven by a changing global balance of power, the repercussions of the pandemic, and the aftermath of the 2008 financial crisis. Nonetheless, the British case starkly highlights the tension between a nation's imperial ambitions and its internal realities. Once ruling a quarter of the world's landmass, Britain now struggles to provide a decent quality of life for its own citizens. While imperial ambitions remain alive, the economic foundation to support them has eroded. Studying Britain's experience offers important lessons, not to foster criticism, but to understand risks and avoid repeating mistakes. History confirms that economic cycles of boom and bust are inevitable for any country. Present prosperity does not guarantee long-term stability, especially when built on fragile credit systems and speculative finance. The central lesson from Britain's crisis is that sustainable growth requires a delicate balance between market efficiency and social fairness, weighing short-term economic gains against long-term societal interests. Living beyond means, borrowing heavily, and depleting national assets cannot be a permanent strategy. Another vital takeaway is the danger of over-reliance on the financial sector at the expense of real production. The deindustrialization experienced by Britain in the 1980s left entire regions without economic prospects, a legacy that continues to impact the nation today. She established a country marked by profound regional disparities. It is hoped that the British, renowned for their pragmatism and common sense, will find a way to overcome the current crisis. By examining their experience, other nations might learn to avoid similar pitfalls and develop a more balanced economic system. Such a model would ensure a decent standard of living for every citizen.